Welcome everybody, session 4, FinVid screen stock screener. Go ahead and load everything up. Hopefully you're having a great Sunday. So basically, if you're not familiar with this, it's finviz.com. It's a free online tool that essentially you can make money off of if you know how to work it the right way. And we're going to show you how to do that. If you follow my advice, you can get 50% gains or more or less in the market, depending on how and when you buy stock. So this is a skill that we're working on developing. It took me a long time to get this skill done, and it wasn't because of any books or anything like that. It was just a hard knock world for me, just trial and error. So you don't have to deal with what I went with. Just learn from these tutorials and you can just start winning. Okay, technical, 52-week high-low. We want to go 30% or more below. That's your margin of safety. That's your discount that you get on your stock. And of course, we have to do homework. It's not as easy as just selecting one of these and making 30%. You have to see, just because they decrease in 30, they might go all the way to 0, right? We're looking for the bounce back. So we're looking at it like the market overreacted to something, or it's been, sold off for not for a rightful reason. So we have a little homework to do to see what value and how we can make money from here. The other thing I do is over $20. So that eliminates all your pink sheets and companies that just kind of started, and eliminates like low trade volume type stocks. So let's dive right in. We left off at Devon Energy. Banks, I'm not going to invest in a bank, so we can skip that one. We'll go right to AR. Appreciate you joining us, and just give yourself some time to learn this stuff and you'll be just fine. Okay, 7.9, we're at the lower end of the spectrum here, which is good. 6 months, company looks nice. We'll go with the 10-year, see what that looks like, and that's not what we want, so that's bad. And also, yeah, the full 10 years. I like companies that have been around for at least 10 years. Give me more data to work with versus less, which is not good. So basically they're having problems, and then for whatever reason, see, this is where your homework starts. What happened in 22 where now the investors are on board, and something triggered this as of 22. So headed into 24 is they are going to keep the momentum up. And then you can see, get back to that 35 high. I would love to spend, I'd invest 10 grand right now, knowing that I'm working with a company that can possibly give me $30 to $35, and especially if it happens quickly. I don't like to wait a year to get my money. I want to get it in the next, 2-4 weeks if possible. So we'll go right along. We will look at the earnings, and because I don't want to overwhelm anybody, we just do a couple companies. Tomorrow we'll review the companies we did in these 4 sessions, and then I'll show you how we further break it down and look at it from an investor standpoint, successful investor standpoint. Okay, so you can see right here, they were losing money. They're negative, and now they're positive. So no mystery here, really. I mean, that time on big charts where they started to break out, this is exactly why. They had negative. It was 465 down to 61, And right when they started showing positive earnings, investors got on board, and that's why 22 was good. Let's see how they see. And right here, you're positive, and boom, then you're negative again. See, that's why for this one, it's a no-go for me. And that's what you deal with. Just companies like that that you just want to stay away from. Okay, PDS. PDS, drilling company, precision drilling, 8.1, low PE. The PE average you're looking for is like 14 to 17, so this is half. This is good, very good. The earnings, the timing of it all, we're right in the middle here. 5-year looks pretty at pace with the market. We want something that crushes the market, like the market here is crushing the company. We want the opposite of that. 6 months looks better. And then now we'll look at the earnings and see what that holds for us. Precision drilling. So they're at 519. That's quarterly. So yeah, nice quarter there. Let's go to annual. Annual 17 was -6. Same kind of story as the last company, just negative till this year. So this year it looks like now they're starting to break. 519, $1.47. This year's nice. I like what they've done. So the question is, will they be able to keep this up going forward? So it might be worth it just to have them on the list. Check out the cash situation. Yeah, you're 52, 284. So something's working out now. So on this one, I would like to check them out. So I will be putting them on my list and seeing what they can offer in the future. We'll show you more about this tomorrow, about setting up a spreadsheet and having this work for you. This is your canvas. This is what can make you money in the stock market by setting this up correctly. I'll show you more about that tomorrow. PDS, I don't believe they have a dividend. They do not. But this is something we'd like to look at and see if they can continue to have positive earnings. Yeah, 41. So yeah, it's 86 if they can have more quarters like we've seen that $5 quarter. Well, if it goes back to negative, this 53 could be 23, and you're stuck holding the bag. So we don't want that. So our job as investors to see going forward if they can retain that. So our questions are, what happened in this last year? So for me personally, I'll actually call this company and I'll inquire on that. I'll inquire on and Google and see what has transpired in the last year or in the last few quarters here since the beginning of this year, and see why the positive growth would continue long term. And I'll research that and I'll find those answers out, and I'll determine if they stay on the hit list for possible investment or to delete. All right, next stock. That's the end of page 1. We'll do a couple more and then call it a day. We have a pretty good list already, some nice companies to review and go over. PLPC, and keep in mind, this is only 10, 15 minutes a day. And this is literally my work. What I'm showing you, that's it. There's no off-scene anything. This is what I'm doing. This is how I do it. for the last few years. So you don't need an 8-hour workday. You're very limited on what you need to do. But when you're at work, you're producing. I do this very fast. I'm very good at it. Okay, so 128, kind of on the higher side of things. We would like to have caught it at the 78. So our timing isn't that great. Let's see what it looks like. 10 years. Perform line products. Okay, they trail the market, not good. 5 years, what does it look like? Better. They trail and then they break out. So this year, again, like the other company, has broken out. That's why you get the low PE, right? Because the price hasn't caught up to what the earnings is. But is the earnings retainable? Just like the last company, we got to find that out, and we have to be first of the game. And then if we're first of the game, then we get all the upside, and we win the gold at the end of the rainbow. So let's see, PLPC. We'll check the earnings, see where we're at here, and then we'll run maybe 1-2 companies, and we'll be done for the day. Line, quarterly, let's start with annual. Oh, much better than the last couple of companies we looked at. 295 to 248. Pretty much, yeah, they doubled. 528, 463, 605, 728. This is nice. Much rather have this type of picture than the last few that we looked at. Very solid. Very nice. This one will definitely go on my hit list. I'll look at the money situation. Let's see. Right. Check this out. So right there you have negative 14. That was last year. I'd really like to see these numbers this year. Let's see here. So now they have positive cash. So there you go. So things are working out right with this one. So definitely one that will go on. So just like that, we have 2 companies. Some of these sessions we're not going to have any, and some we might have 2 or 3. It just works out that way. Or, I rather go drive for 4 days, get one, but that one be the investment that gives me, 2, 3 bigger in a month, and that can happen. You just have to. Everything has to align. Your timing and everything else just has to be in line, and the company growth potential has to be there. A lot of different things, a lot of different factors have to line up. Okay, so airline, I want to stay out of the airline business. Biotech BNTX, we'll end it here at BNTX. We got a couple good ones for today, and that's good enough for me in a 10-minute session. That works. That's production on a mass scale. Okay, so they haven't been around 10 years. I did a 5-year, and that's barely in existence with the company. It blew up right away. So right away, I'm kind of interested. Biotech, that is an interesting niche for sure, for obvious reasons, that could impact human lives on a global scale very rapidly. You want to know how to get rich overnight? This is biotech technology, that type of thing. Yes, those are the ways. So if we're in the kill zone here, which we'll find out right now, BNTX. See what the earnings situation looks like, annual scale. 95, wow. See, that's why they blew up. They went right to 50 and then 41. That is crazy good. and then what happened this year? So then they fell off. So that as an investor, I'm like, what just happened? That's like a train wreck, you know? So with this company, I'm just gonna have to pass. I don't know what happened in the last 2 years. I mean, maybe, we'll research it coming up or what have you, but we got two good ones for today, and that's good enough for the weekend. So tune in tomorrow. We'll recap what we just did over the last 4 days, and then we'll go from there. Have a great day.